Hi, it's Steve O'Hare, and welcome to edition 492 of Talking Bull. It's Friday, the 5th of November. Non-farm payroll today, Guy Fawkes Day today, so look out. Let's take a look at really the market highlights on what really went on yesterday. US yields moved significantly lower during the day amid a recalibration of interest rate expectations. There's a wider shift in global interest rate expectations, especially after the Bank of England statement. Wall Street equities further made headway with record highs for the S&P index. Risk appetite held steady, but markets were wary over a switch in market trends. Dollar posted gains against the euro and commodity currencies as investors took profits on reflation trades. Euro dollar dipped to 3-week lows just below the 115.50 level, but stalled in front of the 115.25 support. Yen posted notable gains as global yields declined with a covering of short positions. Swiss franc also maintained a strong tone. Sterling weakened sharply to 1-month lows after the Bank of England decided against an interest rate and increase and cast further doubt on market expectations, also highlighting expectations of inflation going to 5%, but says it's only transitory. Really. Commodity currencies lost ground amid a downgrading of yield expectations. Oil prices failed to sustain gains despite OPEC meeting expectations with speculation that the US would release reserves. Precious metals were boosted by lower US bond yields with gold approaching the 1800 pivotal dollar level. And Asian markets overnight have lagged their US counterparts once again. Hang Seng bearing the brunt of the session that saw losses across Hong Kong, China, and Japan. That comes off the back of a suspension of trading for Chinese property developer Kaiser and its Hong Kong subsidiaries as the debt crisis in the region rumbles on. In the US, gains have been focused on growth names, with the Nasdaq pushing into fresh highs again. Looking ahead, the US jobs report looks set to dominate proceedings. Despite the FOMC having kick-started the tapering process this week, traders will begin to question when rates will begin to rise. Record US job vacancies have eased concerns around recent NFP weakness, but a sharp September decline in COVID-related financial assistance does signal a likely return to work that should soon provide a resurgent payrolls figure. Is that good or not? We don't know. So let's take a look at the charts. We'll start with euro dollar. This is what was my gun to the head trade yesterday. Really run over briefly what's been going on here. We've got this head and shoulders formation, double top formation. It's a corrective pattern, and we are looking to break lower. 115.25 to 115.30 is the line of the sand. We've also got a 50% Fibonacci retracement, but that shouldn't really provide too much support. Really, the focus would be on a move to the 61.8% fib, coming in at 112.90 to 113. We have had a reaction higher to the resistance. It stalled yesterday, and stalled last week and moved lower this week. So we can see on the daily chart, price action really bearish outside candle, so negative for price action, really set to for me, selling a break below 115.20 seems to be a good risk reward trade idea. We've got the market, the MACD turning over to the downside on there. Cable under pressure, and obviously the fact that interest rates didn't rise yesterday, which the market was expecting. I think the consensus was a 7-2 in favour of keeping rates as they were. 2 people voting for a rise, although Bank of England Governor Bailey did say the call was very close. They are probably looking for looking really at seeing how employment and wages pick up, and whether this will give them the actual onus to actually go ahead and raise rates. The rate rises are expected over the coming 12 months at least. Inflation highlighted at potentially reaching 5%. Feels like it's a lot more already, but obviously who are we to judge? Support coming in at 134.16, so a break below there, and I expect an accelerated move to the downside. Dollar yen in this bullish flag formation, still potential for a move higher. The dollar strength is being maintained into the end of the week, and I wouldn't be surprised to see this challenge the highs very soon. This targets really the measured move target for this bullish flag is a move to at least 119 to 120 dollar yen. Aussie dollar bearish outside candle yesterday, further downside this morning. We're breaking below the 73.80 support level, trading there now actually. Next support coming in at 73.15. So that's looking pretty good at the moment. Let's take a look at commodities. Oil basically had a reaction higher yesterday, but gave up all the gains during the day. We can see it on the 4-hour chart. We've got this upward, this bullish channel moving higher. We broke below it, and we now have a downward trending channel, and we're challenging the bottom of that. So there is potential. 78.80 we highlighted as support yesterday in WTI crude oil, and we are trading there now. Is there potential for further downside? Potentially, yes. We are seeing this this move lower on the back of basically the let's take a look. It was the US speculation that US would release reserves. So that's the main thing that's driven this downward move. Oil prices failed to sustain gains despite the OPEC meeting expectations. So OPEC have met the expectations. The US could come in and scupper the plan. A similar sort of formation lower. Let's try and get a channel, downward trending channel on this. See a nice trend here, trend there. So this has broken through the support at 81.50, and now we're facing further support at 78.75. Obviously, the $80 level in Brent crude will also provide some sort of psychological report. So on the back foot on both Brent and WTI crude oil. Switching across to gold, we're seeing that challenging $1,800. That's a psychological resistance, and we can see the reaction from just below. We got just below 1760 has been confirmed. We had a dip down to 1780 yesterday, and that failed to sort of contain the prices, or the buyers came in and supported that. That was forming a evening shooting star formation, but we saw the reaction higher when the markets reopened. Let's take a look at cryptocurrencies. Bitcoin still holding around the all-time high. 67,000 is the all-time high. We're trading at just above 62,000 right now. This is looking a little bit like a triangle formation, which would have a tendency to break to the upside because we have actually moved higher into this formation. So really looking for a break anytime soon over the next couple of days. Dips continue to be bought, and for me, it still feels potential to the upside, despite the fact we are getting this bearish divergence. That's the one concerning factor for me. Also, the fact that this is just an inflated bubble, but that's got nothing. I've got no control over that. Price action still moving higher while the momentum is slowing down. We've had a move up into this triangle formation, this corrective formation, that then gives us potential to move higher. So, but Bitcoin really needs some sort of boost to really sort of kick it on. The momentum has really stalled, so potential for a further correction. We should find support below around about the 58 to the 56,000 area. Really need to clear resistance at 64,200 before challenging 67,000. Cardano holding around the psychological $2 level. Ripple has pushed higher, but again consolidating just below the swing highs that we saw in on the 10th of October. Ethereum hanging around the all-time highs and looking pretty decent, but again we've got this bearish divergence that I can't stress enough how important that is to clear. Let's take a look at indices now. Obviously all-time highs again for the US. Let's take a look at UK and Europe first. As we're speaking now, FTSE pushing towards the highs of the year, and looking like it's not going to slow down anytime soon. Dips continue to be bought. We're trading around 73.07. Next level of resistance, take a look at the longer term charts. Really no sort of horizontal resistance to mention. We're above the 78.6 fib. I don't really look at the 88. And really the top of this channel coming in at 75.10. That's where I can sort of gather resistance from. We can see that the amount of time we've spent trading in this area is pretty decent. So this will be sluggish drive higher all the way to even the 7900 level. So a grind higher for FTSE. Obviously that benefiting from the dollar strength as well. A lot of the components of the FTSE index do profit in dollar. All-time highs again in DAX. GR40, 16,065. We're pushing up there. We're trading. We've just pulled back from there, 16,020 trading. On the daily chart, this has basically negated the head and shoulders formation that I was drawing, but it hasn't sort of taken away the potential. I know I'm always looking for the bearish tact on this, potential for a double top. We can see that yesterday's price action is a bit indecisive. Momentum is still pretty positive. The trend is strong, but obviously we are seeing it being topping out, if we could say, with the momentum. So we expect some sort of correction. Markets that don't very rarely just go up in a straight line or down in a straight line. But yeah, yesterday's doji a little bit concerning. So if we manage to break below the 16,000 level, we could get a little bit of a flush out to the downside, a little bit of profit taking after this awesome week that the DAX has had. Dow Jones, all-time highs in Dow Jones, 36,195, and we're sitting, but again, hanging man candle, signs of potential for reversal. We've got non-farm payroll later. That's a volatile event that could have a decent impact on the US indices. Then that will have a knock-on impact on the European and Asian Pacific indices also. Everything is pretty tight to each other. We're seeing, as prices move higher, we're seeing momentum stalling, bearish divergence yet again in this bubble-like atmosphere. Momentum pretty strong still in NASDAQ. No signs of that bad boy slowing down. Yesterday's all-time high at 16,388 is looking pretty good. And S&P's all-time highs today, or was it yesterday? Oh, yesterday, just shaded it a little bit. 46.84.5, 46.83, 84.3 today. So yeah, bearish. The momentum is stalling as we're pushing higher. So be aware of the bearish divergence. Can't stress it enough. Overnight price action in ASX 200. Retested the 74.80 resistance level, and we've also got 74.88 as resistance from way back in September. So the last, as we say, the last 4 or 5 days have been positive, although volume's dropping off and momentum isn't really as strong as it was previously. China 50 under a little bit of pressure. Not really sort of following suit, and again volume dropping off, bearish momentum is evident. So really that is not, the Asian Pacific indices are not singing the same tune as the European and the US counterparts. Nikkei also under pressure. Doji candles posted yesterday, evening doji star formation potentially. That could be a good idea for the gun to head challenge. So gun to head, I went short of Eurodollar yesterday. Let's take a look at it. I really was preempting this potential break of the support, which I think will open up a bit of a vacuum move to the downside. And on the 1 hour chart, bearish engulfing candle forming as we speak. So let's have a little bit more thought. I mean, we're expecting decent volatility today. I think I'm going to go with, let's do another Eurodollar trade today. Let's keep the stop a little bit tighter. So we'll have a 20 tick stop on it. We're getting short at 115.51, stop at 157.51, and targeting a move. Let's do 4-to-1 risk reward, 114.71. That's my gun to head trade idea. This is where we have a bit of fun and say, if there was a gun to head, what would you trade right at this moment in time when you're forced to do it? Life or death decision, just a bit of fun though. So really looking to enter short on Eurodollar. Still think if we get a break of this 115.25 to 30 level, it could really open up a move to the downside. So looking for maybe a positive number on the NFP to support the dollar. So let's take a look now at expectations for the day ahead. We've obviously got non-farm payroll, jobs report coming out, expected to rebound to 300,000 from 194,000. Unemployment rate expected to remain at 5.8%. Canadian employment report and the IV PMI from Canada at 3 o'clock. Yeah, that a bit pretty much covers it up, covers it off, and brings the week to an end as far as we're concerned from Talking Bull. We look forward to seeing you again on Monday, the 8th, which when Joe will be back, and he will, I'm sure, be looking tanned and beautiful. So enjoy your day. Be careful today with non-farm payroll, and look forward to seeing you next week. Take care.